Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Bert the Hurt and Big L over there, the Dividend Diplomats. We are about to have a fatal four-way match because tonight's WrestleMania, and we are hyped up to talk to you about some dividend stocks.
Smash that subscribe button. Give Bert and I a nice thumbs up. Turn that mother sucker blue. Let's get the show on the road. Today's going to be a big dividend stock analysis from a lot of the comments that we've been receiving, and it's really focused on one industry, but 4 dividend growth stocks.
Yep, exactly. And that's what we've been talking a lot over our channel, trying to find some undervalued dividend stocks to buy. We put together some watch lists recently. So you know what? We decided, we hear your comments. We want to dive into 4 major players in a sector that is currently showing signs of undervaluation across the board. So we're going to run each one of the companies through our analyses, as we always do, talk about them, compare them, and just let you know our thoughts on the sector and if we're going to be buying these companies or adding them to our watch list at the end of this video.
Again, we are dividend growth investors. So you better believe all 4 of these companies increase that dividend year after year after year after year. That bobblehead Bert in the background. So we wanted to bring these to the table. And this is in a way a nice, the fatal 4-way match in one major industry. And that industry is the pharmaceutical industry, baby. We've heard you guys loud and clear. You wanted to see AbbVie, but I didn't want to just see AbbVie. Bert was like, we need to throw in a few more dividend stocks to really blow up this match, to really bring the viewers and to make sure that we can reach out to the millions and millions of dividend investors out there. So we threw 3 more names in the ring with AbbVie. So Bert, at a high level, what are the 4 companies we are about to deep dive into for the Dividend Diplomat Stock Screener Showdown?
Company number 1 is AbbVie, ticker symbol ABBV. Company number 2, Pfizer, ticker symbol PFE. Company number 3, Bristol Meyer Squibb, ticker symbol BMY. And last but not least, ticker symbol 4 is Abbott Laboratories, ABT. Oh, that was the longest Macho Man I've ever attempted before.
Oh man, you guys just heard him. He's prepping up for 10,000 subscribers. So smash that subscribe button if you haven't already. Nobody anticipated that. Oh wow, wow. I mean, we're gonna have to start calling him Macho Bert.
Yeah,
Macho Bert, Randy Hurtlocker over there. Oh my god.
Pumping some iron and getting that creatine if I'm gonna hit that for the video.
Next time Bert's gonna be like, woo! He's gonna be like, beat the dividend stock. You gotta beat the dividend stock. Woo!
Yeah. Well, and since I was gonna say, since I listed the 4 companies out, can you tell us how we're gonna analyze these companies and what the 3 metrics and the 4th bonus one we're gonna use are?
We listen up, brother. We're gonna run them through the Dividend Diplomat Stock Screener. Now, we had to search far and wide, and all the dividend maniacs out there know the 3 metrics. We got 1, the dividend growth rate. 2, the price to earnings ratio. 3, the dividend payout ratio, in a different order. So you listen up, me and Bert. We had to put these into the ring. We had to run them all through the metrics. We had to search. We had to find. But we're here, brother. So you listen up, Jack. So now we're going to run them through the screener to see which one is the best dividend stock to buy now.
Couldn't have said it any better, Lanny Hulk Hogan. That is quite the impersonation for the people out there. So, hey, it's WrestleMania tonight. Let's jump right in. We're going to use tickers. We're going to use stock prices as of market close on 4/9. We'll use the earnings from Yahoo Finance, the average estimates, and we'll pull in that dividend history. So first, AbbVie, let's start with this first metric. Currently, their most recent stock price was $107.54 with a forward earnings of $12.43. That gives us a PE ratio of 8.7.
Wow, how about that? So let's go over to Pfizer, ticker symbol PFE. We all know they're the COVID vaccine darling right now. Everybody loves that Pfizer COVID vaccine. Everybody talks. Which ones you get? Did you get the Moderna? Did you get the J&J? Hopefully you didn't touch the AstraZeneca. Everybody's looking for that Pfizer vaccine. So they're trading at $36.66 as of the close on April 9th. forward earnings right now are $3.33. Keep in mind they have that spinoff that's about to be fully kind of separated here. Now, based on that price to earnings ratio, though may not be ABBVs, Pfizer is standing at 10.99.
Perfect. And Bristol Meyer, 62.61 was their most recent stock price. Forward earnings, 748. That gives you a PE ratio of 8.4. So, hey, they're the lowest one on this list here so far. Yeah, that's they were lower, just beat out of AbbVie, and then way below Pfizer. So, Lanny, round this out with Abbott. Let's see what we have.
Abbott Labs. I know ABBV staring at them. Their brother sister right there, the spinoff from about 7+ years ago. They're trading at $120.90 as of April 9th, with a forward earnings projection of $5.05. So surprisingly, they're twice as much as the highest one on the list of Pfizer. So they're actually at 23.94 price to earnings ratio.
Wow. So there's one clear outlier from this list from the first metric. Very interesting. I was not expecting Abbott to be trading that much higher.
Right. And before we go into the metrics, keep in mind, some of the top drugs from these companies like ABBV, they got their Humira, Pfizer, they have their Advil, their Robitussin, the blue pill. I know Bert's just got a ton of those in his pocket.
I thought didn't they spin that part off? Was that the part that was spun off?
Well, I think Viagra's spinning off, right?
Yeah, blue pill.
I think so. And then you have Bristol Myers. They have some, drugs that I haven't really heard. And then Abbott Labs, I think is big within Pedialyte, Similac, a lot of those, kind of formula type products. So Bert, do you want to dive in now to the second true dividend metric, the dividend payout ratio, which we like that perfect payout ratio between 40 and 60%. Because why, Bert? Why is that a perfect payout ratio?
Perfect blend of reinvesting your earnings in the company to continue growing operations and generating more earnings, and also paying our shareholders a nice little reward here for holding stock and taking that risk with you to see you grow that earnings and dividend. So to kick it off, AbbVie dividend $5.20 per year. That is divided that by the forward earnings of $12.43. That gives you a perfect payout ratio of just under 42%. Starting this one off strong for a company in the climbing the ladder, grab the money, grab the belt. Is that what we're going with, Lanny?
That's right.
We're going to see if Pfizer's about to kick that ladder out from right underneath them. You want to tell us?
Pfizer's current dividend, at 39 cents a quarter, times out by $4.56 in dividends per year, over the $3.33 earning estimate from analysts. That's also in the perfect payout ratio range of 46.85%.
It's not a race, but it looks like both of them are climbing up the ladder at the same time. Let's see if Bristol Myers can kick that ladder out also from underneath them. Their dividend per year is $1.96. Divide that by 748 of forward earnings, gives you a payout ratio of 26%.
Wow. Pretty
very
low.
Very, very low. So I'm going to be interested when we start talking about the dividend yield later on and see how that compares to the other two companies we've talked about so far.
I would agree. And, to round it out here with the fourth, the four horsemen here with Abbott Labs, their forward dividend, right now is $1.80 annually. Divide that over the 505 earning projection. Not as low as Bristol Myers, but lower than ABBV and Pfizer at 35.64%.
So the moral of the story here is all companies pass our stock screener easily, plenty of room below 60%. First two are perfect payout ratios, and two of them are very low and have plenty of room to continue growing that dividend going forward.
Gotta love the safety and the dividend across all four, everybody. Again, what this payout ratio means is that there is plenty of room for dividend growth in the future, and the dividend risk factor here is low.
Yep, exactly, Lanny. Moving on to metric number 3, the history of increasing your dividends. Here we're going to talk about the 5-year average dividend growth rate and how long these companies have been increasing their dividend. So I'll kick it off with AbbVie. As always, their 5-year average dividend growth rate is actually insane. They have been on a very hot dividend growth streak, and we've loved it as shareholders because, yeah, we love seeing our income grow this much. 5-year average is 19% for the company, and they have increased that dividend for 7+ years. They've increased it every year since they were spun off from Abbott Laboratories in that way. So you'll see with the companies, they both have strong dividend growth histories. It just doesn't look as strong because the company's split into two going into that. So anyone, why don't you tell us about Pfizer?
Yeah, and keep in mind too that ABBV, increased their dividend over 10% during the pandemic back in, gosh, I don't know if that was the fall last year, October maybe.
Yeah, I think all these companies increased their dividend in the fourth quarter. I think that was like the timing. It was either the very end of September or in the fourth quarter, each one of these companies announced their increase.
Yeah, I agree. So, Pfizer's been increasing their dividend ever since the financial crisis. So they're going on, you can argue 10 to 11 plus years with Pfizer. Their increase was very small in December, by about 2.6%. So we'll have to see what the dividend shakeup is going to be. So growth overall over the last 5 years is at 6%. So we'll kind of see what happens in 2021.
Yeah, and I think that shakeup's an important thing to highlight because it is going to look like Pfizer's dividend is going to decrease here slightly in the coming year. But in reality, since they spun off a piece of their earnings, their cash flow with this new company, they're spinning off some earnings, they're spinning off some dividend, and they're going to split it between the two companies. So what you're going to want to look for is what is the combined dividend of Pfizer and this newly spun off company to see is the dividend maintained for shareholders who held it before the spinoff.
Oh, it's true. It's damn true.
Company 3, Bristol Meyer, we know the drill. They've increased that dividend for 11 years, and they have a 5-year dividend growth rate, average growth rate of 4.65%. So, hey, this is the first one where Bristol Meyer's not in first place with this one. They are the lowest of the 5-year averages that we've discussed so far.
But keep in mind that growth rate is on the up and up. They, similar to ABBV last year, they increased their dividend 8.9%. According to my metrics back in December, kind of the same month as Pfizer. So 8.9% during the pandemic, which is 2 times that 5-year average for Bristol Myers.
Yeah, that's perfect. Because again, what we're going to want to see is lower payout ratio. What's going to happen with that average dividend growth rate? It's going to be very exciting to see what this dividend yield is in that bonus metric. So go into Abbott, Lanny. Tell us, how's Abbott doing?
So Abbott, they were a dividend aristocrat, which was 25 plus years of increasing their dividend year after year. They've been increasing it every year after the spinoffs. That always kind of throws is the streak there? Does the streak continue? Does Taker streak continue? Is that a win? Does it end? So they've never stopped increasing their dividend, but with the spinoff, their dividend was lower, but yet they've increased it since then. But yet you got the ABBV, so it's a confusing way to look at the growth for Abbott. I still call them a dividend aristocrat. I don't know about you, Bert.
They still are. It's kind of the same thing I was mentioning about with Pfizer and what's going to happen when you have spinoff. It always makes it a little odd. So you just got to look at what your payout is before and after, because that's really what the answer is.
You got to say, what? Abbott's going to increase their dividend. What? So Abbott actually increased their dividend beats everybody here on this list last year during the pandemic back in December as well. So yeah, I think it was Pfizer, Bristol Myers.
They're all right in a row. It was.
Yeah. Abbott had a 25% raise from 36 cents to 45 cents. That was the banger. So lower yield, but keep in mind that last year increase was 25%. Now the 5-year average is 9.4%. So second on this list behind the brother sister ABBV.
Yeah, so interesting stuff. So let's go into that bonus metric, the dividend yield. AbbVie, their yield with their current dividend and their stock price is just below 5% at 4.84%.
Ooh, sweet.
Yeah, I mean, that's the interesting thing about this company. They always have a really nice yield. Couple that with the payout ratio and some of their growth rate. It's a very impressive combination for a company. It just always seems to be undervalued.
Oh, I don't know if it can beat 4.84%, but Pfizer's sitting steady at 4.26%. So they've been hanging out over 4% for pretty much a year plus.
Yeah.
So if you're ever looking for a stock, I know Pfizer is always on a lot of people's radars, similar to ABBV, always over 4%, always had undervaluation in dividend metrics. So 4.26%, kind of, again, a questionable dividend growth rate going forward post the joint venture / spinoff / whatever you would like to call it. So yeah, not too bad. What about Bristol Myers, Bert?
So their dividend yield with that 1.96 annual dividend is 3.13%. So much, still great, still above the market, still beats the heck out of your savings account, but definitely lower than the first two on this list. And the reason why I kept saying with the dividend yield and their lower payout ratio, it's not surprising that it's lower than the other two. If both AbbVie and Pfizer had payout ratios in the 40%, that means they're paying out more of their earnings. So you would expect the lower payout ratio, the dividend yield, to be lower. And that's exactly what I was expecting.
You know, is a good frame of mind is if Bristol Myers paid out as much as what ABBV and Pfizer did, Bristol Myers dividend yield would actually be over 5% if you kept the payout ratio at over 40%. Their yield would be over 5%.
Yep. So that's it. Pay out lower earnings, you're going to have a lower dividend yield. It's pretty simple, right? So I round this one out, Lanny. What's Abbott?
Abbott's yield is the lowest here on the block, 1.49%. So just at or maybe slightly under the S&P 500 index as a whole. You know, again, they had a higher payout ratio than Bristol Myers, but half the yield is Bristol Myers. So keep that in mind. But they did have a 25% banger in December.
Yep. So perfect. Now that we've gone through the metrics, let's do a quick summary by company here. AbbVie, ticker symbol ABBV, PE ratio 8.6, dividend payout ratio just under 42%. Increase that dividend every year since the spinoff with a 5-year average growth rate of 19% and a dividend yield of 4.84%.
Pfizer, ticker symbol PFE, price to earnings of 10.99, payout ratio of 46.85%, 5-year dividend growth rate average of 6%, and a current dividend yield of 4.26%.
Bristol Myers, PE ratio 8.4, payout ratio 26%. They've increased that dividend for 11 years, 5-year average growth rate of 4.65%. Although this last year they doubled that with their dividend increase, and their dividend yield is 3.13%. Let's round home, and let's head home.
Abbott Labs, ticker symbol ABT, price to earnings ratio of 23.94, the highest out of the group. A dividend payout ratio of 35.64%, the second lowest on the list. They're a dividend aristocrat, so they've increased their dividend every year for at least 25 plus years, and every year since the spinoff to ABBV. 5-year dividend growth rate on average is 9.42% with a low dividend yield of 1.49%.
Perfect. So that's it. And that's the 4 companies. So Lanny, here's the question for you. Are any of these companies a slam dunk to you? No, I'm kidding. In all seriousness, what are your thoughts on these 4 companies?
I like, you know, if you're a dividend growth investor looking to reach, you know, maybe the promised land sooner, you know, I would take Abbott Labs off the list. Highest price to earnings ratio, lowest yield. Dividend growth rate was great for 1 year, but who knows what it's going to do going forward. You know, Bristol Myers, if you don't have a position in pharmaceuticals, Bristol Myers is a very intriguing stock to add to the watch list because of the low PE ratio, the lowest dividend payout ratio, a growing dividend growth rate with a 2 times the S&P 500 yield. So I actually like, in my order right now, based on my current portfolio, if I was a new dividend investor, I like Bristol Myers, ABBV, Pfizer, then Abbott Labs.
Yeah, I mean, I agree with knocking Abbott out of here. It's nothing against the company. The metrics just don't fit what I'm looking for right now.
Love doesn't fit.
Yeah, it doesn't. I mean, I like all 3 of the others. All 3 of the metrics look great to me. I own the first 2. I own AbbVie and Pfizer. I don't own Bristol Myers. I sometimes just feel like I don't know if I really want to start another new position in my portfolio. It's absolutely nothing against Bristol Myers. I just have enough companies, and with the metrics looking great for AbbVie and Pfizer, both are still well below high, strong yields. Also,
Bert's about to buy. Bert's buying AbbVie.
We'll see. I'm not committing to anything right now. Market's closed today when this video is released. I can't buy anything, but I'm serious. But yeah, I would say AbbVie, Pfizer, Bristol Meyer, Abbott, and the first 3, it's 1A, 1B, 1C. This isn't as if they're 3 bad companies either. But now we've talked. Tell us in the comment section what you think of these 4 companies. Which ones do you own? Which ones are you watching? What are you buying? who wins this fatal four match in your opinion.
And let us know which ones you currently own in your portfolio, which ones you're currently adding to. We can't wait to read the comments and get the discussion going. If you enjoyed this video, give us that thumbs up. If you haven't already, subscribe to our channel. Bert and I love building out the dividend investing community because we care about teaching and showing what stocks we're looking at, buying stocks we're looking at, and telling you and showing you everything. I'm fully transparent here. Now, Bert, any parting words?
Oh yeah, it's time to like our channel so we can get to 10,000 subscribers.
So The Rock says, save your money, invest. If you smell what the Dividend Diplomats are cooking. That's Bert Landy from the Dividend Diplomats. Over and out.